in listen-only mode.
Good afternoon, everybody. Stan and Jack here for Ask Us. This is a subscriber Q&A session. And by the way, your questions, please put them in on the Questions tab in GoToWebinar. And the questions can be anything about the services we do or a specific instrument. We can review it, or something about trading in terms of risk management, or just about anything related to trading that you want to ask. This is your time to ask it. I guess what I want to do is quickly go through our disclaimer, which is here. And the disclaimer, basically, we do what we do on the Art of Chart for educational purposes. We don't issue trading signals. We hope that the materials we provide here are something that help you in your trading decisions and are something that you can transfer to your own work. So that said, there is something new, and I'm trying to make sure our subscribers know about this. We're going to be giving you free access to a new service that we're doing. And the new service, we're calling it the Big Five. Okay, the Big Five are Amazon, Tesla, Facebook, Apple, and Netflix. Okay, so what we're going to do is give you free access to those charts. Basically, there's going to be a new page up sometime today under subscriber content. Okay, so if you have the Trader Triple Play, you have all of these options here. You're going to have another option here, and it's going to be called the Big Five. And on that page, you're going to find charts, and we're going to be posting charts there on Sunday night and on Tuesday night. So the Big Five, it's on the front page. There they are. Okay, so the Big Five chart service, it's basically our technology applied to those five stocks. And so you'll have free access to that as a subscriber for a period, I think maybe a week, maybe 2 weeks, just so you have a free taste of it. And you may want to subscribe, or you may not, or you may not trade stocks. And if you don't, fine. But there are a lot of stock traders out there, and these are some of the major stocks that they do trade. So that said, Jack, I guess anything else you want to add? Are we ready to start?
Yeah, I think so. I mean, I'm going to do a blog post talking about some stock analysis in the past. I mean, a lot of the members have never really seen us analyze stocks, but actually I used to do them pretty regularly, and so does Sam. So I'm going to post up some Apple stuff that I was doing in 2012 and 2013, and compare it, because we're actually looking at an identical setup here, which likely hasn't made target yet. So we're going to be putting that up, and we'll see. But I think this will bring out our work to an audience we've not been covering before, really, which is stock traders.
Yep. And I've been trading stocks since '99, so it's something I've been doing quite a lot of. And I don't ever post my stock stuff, but a lot of these instruments, Amazon and Apple especially, are ones that I've been tracking for quite some time. Okay, so that said, let's get to questions. And let's see what questions we have from folks about the service or whatever else. And I don't have any questions posted yet. So that long-winded introduction, by the way, was a way of getting you guys to post whatever questions you have interest in. So in the interim, while folks are typing away, shall we just do a quick look at the Emini, since it's right in front of us?
Yes.
Okay.
As well.
We called 88s to 92s. That's been on the table on the daily update now for 2 days. 88s to 92s. What did we hit? We hit, was it 88.75 or was it higher? I'm trying to remember. 89.25. I thought it was 89s, right. So 89s, here's your A leg, here's your B leg. We have a C leg coming. We've been saying 72s is something to look for support. I'm expecting a lower price. Could we get monthly pivot? We could get 67s also, but 72s and then higher prices. On the S&P, I want you guys to be aware, and if you're a subscriber, of course everybody here is a subscriber, but be aware, high window coming towards the end of September, starting on or around the 20th, okay? So again, looking for weekly, monthly pivot, higher prices, 22.10, 22.20. So that's kind of my take. Jack, you want the screen for a minute?
No, I don't think so. I think what I will say is on the NQ, the bonus chart I posted last night, I'm going to do an update. They've still got an open target at the, I think that was 47.80, and the monthly pivot is not far below it. I've got that as a potential target there. I do not have a clear target on, well, I've got two targets on ES. One of them, realistically, is the monthly pivot, and the other one could overextend slightly, I think.
Yeah.
Realistically, I'm thinking weekly or monthly pivot. I'd be surprised to see it break the monthly pivot by much. And someone mentioned they thought that 54 was good support today, and I think I'm not sure we'll get close enough to that to throw rocks at it.
Well, 51s, maybe. I could see 51s. If this is an A, B, and a really, really odd-looking, strange-looking flat, yeah, I could see that, but that would be awfully weird looking. I mean, this 50 back and higher just makes a lot of sense in my mind, but, stranger things have been known to happen for sure. Dow Jones, I'm just going to show you this. I believe that this is a contracting diagonal, so I think this high up here, especially if it's under 19,035, which it should be by that time in September and at this trend line, we see this, folks, we're going to see a significant downturn. We'll see what happens. We have a few questions, Jack. Can you do an analysis of the S&P 500 and the E-mini? Well, I think we kind of just did that.
Yeah, I've got a couple of things to add, though.
Okay,
I think
great. Please do.
The targets only get us down to the monthly pivot. That's going to be pretty good support. The bears, that could change tomorrow. But we were looking at the bears floundering as usual today, and I was just thinking, great, A, B, C to come. Not seeing any particular indication here that we're really going to see anything striking from the bears. All I would say is the only one thing the bears have got on their side is that rut resistance trend line that I posted on my blog yesterday, that was hit at the high yesterday, and this is a rejection from that hit. How much does that mean? Potentially not a lot. So, but could we start a decline from there? Sure, we could. Mm-hmm. But I think there's not really an awful lot apart from that to suggest that a serious decline is starting here.
Yep.
So when we reach support, chances are we're going to find a buy down there somewhere.
Yep, I agree with that. And the only other thing I want to add, and by the way, I am not political. I do not support either presidential candidate because I am disappointed in both parties and both nominations, okay? But I have to say, if Trump is seen in the lead, we're going to see the dollar get demolished. We're going to see gold hit the roof, and the market could make a move. So this is the period right about now, September through the election, where the presidential election has a big influence on the market. So it's you might want to call it a headline minefield, but I would be paying very close attention to the polls at this point. Okay. Is 2142 still achievable now that the low window ended? The low window ended today. And Jack, I'm hearing. Is your mic really close to your?
Yeah, it could be. How's that?
I'm hearing a lot of heavy breathing.
Okay, sorry.
No problem. 2142. I don't know, Jack. What do you think?
Well, I think it's technically possible. I don't think there's any reason to think we're going there at the moment. So, in the absence of that reason.
Yeah, the only argument I could make. And first of all, whenever somebody asks a question, I'm going to always take a look at, technically, is it feasible? Well, you have a 1.618 down here at 2131, okay? So, and you were looking at 42s, which is right here. That's where the S1 is. So is it technically feasible? Sure. I mean, you could see this is reachable from and let me just back this up to maybe the W here instead. Could this be a flat, an A? Here's a flat for a B, and could this be a C down to 35s? Yeah, it can be. I think that is unlikely, 20% chance at the most.
There's no obvious sign of it, and we're not in the cycle high window.
Yep, I agree with that.
It's in long shot territory, pretty much at the moment.
I think so. Exiting the low window on the 8th, which was today, so I'm not expecting this to spring to new highs tomorrow, okay? Don't misunderstand. We could bounce around down here for a couple of days or something, but, starting next week, and by the way, we have a roll tomorrow, so this is going to automatically drop 6 handles or so, 6.5 handles. So, so we'll see what happens. And very often after a roll, you have some sort of downturn, a small downturn, before you see more bullish action. So we'll see what happens. But 50 back and higher, that's kind of what we're seeing right now. Okay, other questions? Now let me ask you guys a question. What do you think, and this is good for me just to get a poll of subscribers and your views, what do you think of the Big Five in terms of us covering stocks? Is that something that you find useful or not useful? Because I know some of you guys trade stocks too. Okay, good idea. Thank you, Gary. Okay, Raymond says we have a couple of questions. So if you have an opinion about the stock service, just let us know, guys. We'd like to hear it. The Big Five, big thumbs up. Thank you, Raymond. Okay, Raymond has a question. How do you know when a trend day might occur? Okay, there are so many things to look at. It's mind-boggling. There's one thing you can look at for a trend day, and there really are 2 different methods to look for a trend day. One is breaking a certain level on the instrument that you're tracking, okay? And that has to do with looking at average daily moves and how big the average daily move is over a 5-day period. And if you break that level, then a trend day could open up. But when you combine that with for example, live measurements of like the AD line, the S&P AD line, and if the AD line gets up in the 350 to 400 area and gets buried, that's a good sign of a trend day. Okay, so there's some simple things like that you can use. I use timing based on program trading. Now, program trading has nothing to do with price. It has to do with time and timing. So you have buy and sell programs executing throughout the day, and you have certain times of the week where certain buy and sell programs, where volume tends to be heavier, okay? Where you see volume heavier, that's where, in the program trading world, that's where you find trend days. So that's where the trend cycle work comes from, is from that. And today was a trend cycle day, and tomorrow is also a trend cycle day. So we could see a continuation of this trend here. Okay. Okay. So that was Raymond's question. Yep.
There's a matter. I mean, what I'm mainly watching is the AD, the distance that price is traveling. Compared to range previous night, previous day, whether the previous day's low gets broken, and whether the signals are working or not.
Yep.
If we're getting buy signals that get run over, that's a very trend day thing to do. Or sell signals that get run over.
I absolutely agree with that. That's the first clue.
Setups still form on trend days; they just fail.
Okay. What is your, and this is a good question for you, Jack. What is your view on oil after the move today?
Well, we're in an inflection point. I think it made the wedge target I posted on the bonus charts yesterday, 47.50, ran slightly past it. I would say we don't have any negative divergence on the 60-minute. I'd be looking for a 60-minute sell signal to signal a turn, and I haven't got one here. I haven't got it at any strong trendline resistance. I am wondering about continuation. So we'll see. But it has made the wedge target. And, just ran slightly beyond it. That is an obvious area where it could fail. I'm just not seeing any obvious signs that it's going to fail.
Yep.
This retracement or something.
Yeah, I think we're at an inflection area, as Jack said. We're at the 100% A equals C of a three-way move. This is a back test, in my opinion. We have 3 up, 3 down, 3 up. I'm sorry, 3 up, 3 down, 1, 2, 3, 4, 5 up into this area. We have the trend line right above, okay, which is from the previous high at 53s. So can we go higher? Yeah, it would be good to see what Jack refers to as divergence. A back test, and perhaps a slightly marginal lower high on RSI. That would be a nice setup.
Good.
Actually, this right here isn't bad. I mean, I'm holding a short right now on oil, and by the way, if I extend this trend line, it's a back test of that trend line right there. So, you know, I think this is going to head lower. We'll see what happens, but the area we have to watch is right here, in my opinion. The monthly pivot, weekly pivot area, very often a support resistance area. So, you know, watch 44.65, roughly speaking, for support tomorrow. That's what I would be doing.
Also, look at the sequence here. We've got 52, 39, 49, 43. What's it saying to you? Lower highs, high lows.
Yeah, right.
It's compression.
Yep, agree. Yep, absolutely. Okay, that said, let's go on to the next question. Okay, a good idea. Is it worth including Goldman Sachs? ? Well, what do you think about that, Jack? Goldman Sachs in the Big Five would be then the Big Six.
Are Goldman Sachs that heavily traded?
Well, it's more of a, I don't know. I know option-wise, the reason the reason we came up with these, the way we came up with these these are heavily traded in the options world. So there's a lot of volume. Now, Goldman Sachs, I used to trade Goldman years and years and years ago during the financial crisis, but I haven't traded it since then. So,
I mean, I was analyzing it in 2011, 2012, 2010. I think I called for the price to halve at the beginning of 2011 or something, or within a year of that, and it did halve. I mean, it was a nice technical stop.
Yeah, let us think about that. That's a good suggestion, Goldman Sachs, and we'll see. The thing is, what we can't do is we can't cover everything. Okay, and frankly, if we're trading 5 stocks, and we're talking about 5 stocks on the Twitter feed, along with the futures that we already cover, I mean, that's a pretty full docket, in my opinion. So
yeah, I mean, there are only so many hours in the week.
Yeah, that's true. No doubt about that.
But I think Stan and I already work very long hours. Now, fortunately, we love our jobs and we do it obsessively, but nonetheless, there are still so many hours in the week.
Yep. Okay, David has a very good question. When you short indices, how do you determine your stops? Okay, let's go to an index. And let me say that when it comes to, first of all, what you're asking, David, is you're asking about managing risk. Okay, now, have you ever considered managing risk without a stop by modifying your size? Okay, and that's just a question I ask because a lot of traders don't think that way, and it really, really helps. Okay, like for example, my oil short right now, I'm only in at half size. Okay, and why? Because there's some risk to it. So I'm not in a full position. So, part of managing risk is using stops, but another way to manage risk is to manage risk with size. Okay, so I think that's an important distinction. Now, stops. If you're day trading or if you're swing trading, I think they're different. Okay, for a day trader, typically you're looking at much shorter term charts, one minute charts, 3 minute charts, and a lot of people trade by just using a fixed number of handles. They'll say, hey, I'm going to use a 2-handle stop or a 3-handle stop or whatever, right? Now, swing trading, and by the way, you don't have to do stops that way in day trading, but you have the option day trading on a short-term chart to get in and out of the same instrument 4 or 5 times in a day. I don't recommend that. I don't believe in. I think let's put it this way: my broker does not like me because I don't do a lot of trades. Okay, but the ones I pick are usually very good trades. So, I'm not in and out of the same instrument 5 times in a day. I think that's not how you make money. You make money by holding your trade. That's how you make money. Okay, and not holding your losers. Holding your winners longer than your losers is of course the most important thing. But in terms of stops here with the S&P. If you're swing trading, like for example, we had a yellow box here, okay? What was the top of the yellow box? The top of the yellow box was 92s. We got to 89. So, if you were able to see the high on the Emini, or if you see us entering a yellow box here, I'd be setting my stop above the yellow box. So I'd be setting my stop above 92. Now, that's one way to do it, okay? Another way to do it is to use a system which involves you looking at volatility using average true range. Now, here's average true range. I have it marked up on my chart here. And actually, I'm sorry, I have it on the wrong chart. Let me go to the daily. I got to go to the daily chart here on the S&P. All right, I'm on the daily chart. Okay, I'm going to put on the daily chart average true range. Now, average true range is a true measure of volatility. Okay, now average true range today is 11.88. So let's just call that 12 so we have a nice round number. I would recommend that you use anywhere from 25 to 33% of average true range as a stop if you're a swing trader. So here you have 12 handles. 33% of that is roughly 4 handles. So if I'm a swing trader and I'm swing trading the S&P or whatever, I'm using a 4-handle stop today. Okay, now when we have volatility like this, and let me just get rid of this. Okay, when we have volatility like this move here, okay, look what happened to average true range. Okay, it went up to 45. In this kind of market, I'm using a 10-handle stop. And by the way, I'm not using a 10-handle stop in the middle of something. I'm waiting for an inflection point, and then I'm using a 10-handle stop. Okay, so I think stop systems are very important. First of all, risk management is the most important thing in trading. Okay, it's more important than entries and exits. It's more important than technical analysis. It is, okay? You got to be really serious about it. You got to figure out what's my system. I use average true range, especially in periods of high volatility. I also manage size, okay? Size is very important. If it's not a great setup and you're like, okay, I'm going to try this, only put on a third. You can always add more. Okay, you don't have to go in 100%. So that's my long-winded answer. I think it's a very serious question, by the way, and so I wanted to take the time just to give you my full perspective on it. Jack, what is there anything you want to add to that about shorting indices and how do you determine your stops?
Well, one thing I would mention that is worth looking at is Fibonacci's.
Yeah.
And you can do quite a lot with Fibonacci's. I mean, if you have a look, I mean, it takes some experience, practice, reading up on it. But I mean, if you learn your Fibonacci targets, it will give you a whole load of levels, and you can see for yourself how well they work, which is often pretty well, very well. You can actually use those areas to base your stops on, and also to base your entries and exits on.
Yep, good point. Good point. Okay, let's go on to the next question. Will there be some kind of package deal for the daily update in Big 5? Yes, if you are already a subscriber, you're going to get a discount code, and we're still putting all that in place. So on your subscriber page, okay, if you're like a daily update person, look at your subscriber page in the next couple of days. You're going to see, something there about the new service, and if you're interested, there's going to be a discount code, okay? And so if you sign up for it in the shopping cart system, just key in the discount code and you'll get your discount. Okay, cycle low was completed today in the S&P, but you still believe in decline tomorrow. How many further days can the low cycle go? Well, hold on. Let's go to a lower level chart.
It's not really about the low cycle. I mean, the fact is you get smaller highs and lows within any move, whether it's higher or lower. Yep. What we're talking about is a retracement within an uptrend.
Yeah, I think that's
the low window has ended.
Yeah.
But that doesn't mean that every tick's going to be up.
Yep.
There's some formidable resistance overhead. The rut resistance is already held, and really you just do the retracements to clear space for the next move up. On the next move up, that rut trend line may break, but we can't just mess around in a two-handle area until that's ready. Generally speaking, you'll do your 50 backs or 61.8s or 38.2s, and you will do your retracements before the next move happens. Nothing goes in a straight line.
Okay. Yep. I support that. Showing you an example of what Jack is saying. Here was the high window. Okay. What did this do? It went sideways. Did we have a high here? Did we have a high here? Yeah. Here was the low window. Where was the low? Here at the very front end. Basically and look what happens after we end here. Then we get the decline. Okay, so the high window and low window stuff. When you're in a sideways market, it means very, very little. I'm not trying to pass this off as like the greatest technical analysis tool in the world. It helps me a lot in terms of seeing formations, but in a sideways market, high and low windows mean very little. In a volatile market, it helps a lot, in my opinion. Okay, natural gas. You guys may have seen the natural gas chart just a few minutes ago. Natural gas is a great instrument to trade with high and low windows. Okay, with timing cycles. Okay, and just an example of that, and let's go to natural gas. We hit a low window here, we turned. We hit a low window here, we turned. We hit a low window here, we turned, okay? And there's a high window coming. So having windows in a volatile market helps a lot because it gives you a clue. Because, right here I could have said we were going to 34s, okay, but there was another low window after it. So it gives you clues, it gives you some insight, and by the way, they're not infallible. They're only right, 60, 70% of the time, and hopefully with the other tools that you have, together it makes more sense. So anyway, you use ADSP, can't find it or get it, David. ADSPD is the symbol on Thinkorswim. And by the way, on my system, what do you use for your keep Stan out of trouble chart, Jack? What indicator?
Oh, right. Sorry, I'm just going to open that up. But yeah, I can give you the stock charts ticker. It's not precisely the same thing, but it's pretty damn close.
Yeah, $ADSP is what I have on my feed. I think Thinkorswim is $80. Go ahead.
$SPX ADP.
Yeah, every system is going to have a different symbol, but look up S&P advancers and decliners. You'll find it. Or you will find S&P advancers and a separate symbol for decliners, and then you can do your own math and just plot it yourself. Okay, and that's pretty easy to do on most systems. Okay. Could we get an update on the DAX and live cattle, please? Sure. Let's go. You want to do the DAX, Jack, and I'll do cattle?
Yeah, I'm opening it up now. Yeah.
All right, great. I'll do cattle real quick. Okay, cattle. All right, cattle is in a seasonal position where I'm expecting it to turn. Okay, I'm expecting it to turn, and let me just move the arrow out of the way here. And what we have here is the following. First of all, low window. By the way, this is a very, very wide low window until we finish this back test. So we called this turn here against the trend line, and you can see a little yellow box there. And basically, I'm looking at, we were expecting weekly pivot. Weekly pivot is 103.775. We got almost there, and we might be done, or we might not be done. But there's a small little teeny tiny 20-day cycle high right here, okay? Now, will it get all the way to the weekly pivot? I don't know, okay, but this is a counter trend move at this point in time, okay? Do we have some divergence here? Yeah. We may have another leg higher. This could be an A, B, C, and we could still see 103.775. I wouldn't be surprised to see that, okay? We have natural resistance here, 105.075. If you can see, could be a floor ceiling, okay? So there's a lot here that could stop us from going higher. The next level up that I have, and Jack may have something else, but I have 108.775. But the low window here is calling price lower, okay? So we could get a 3 up, like so. Okay, that's what it would do on RSI. I would prefer to see that because that, again, as Jack says, it makes room for us to do this, on the way back down in multiple zigzaggy steps, whatever. And so once we make this turn, I don't think we've made the turn yet, but once we make the turn, I will have a narrower low window, much narrower, okay, for the next 20-day cycle. And we'll see where that comes in. It's going to come in towards the end of September. I wouldn't be surprised anywhere from the 20th to the end of the month is probably what I would be looking for. But I believe that cattle will do this when it hits the low window. I think cattle is going to, and I don't know, let me just get rid of this damn thing. So frustrating. Sometimes you're trying to explain something and you can't. I think we're going to break the downtrend, okay, after we hit this low window. This is a significant low window on cycles. If you look at the cycle chart, I'm assuming you guys have seen the cycle chart on cattle. Let me go to the cycle chart, which is on the blog. Tell you what, I'm going to throw the screen over to you, and there's that bad gateway message again. I'm just sick and tired of it. I'm going to throw the screen to you, Jack, and I'm going to pull up the cattle cycle chart just to explain to people how to read the cycle chart because it's on the blog.
Okay. Now, I'm going to make a couple of comments about live cattle first. First is actually on the 60-minute charts on this one. This is what I'm using here is $BCOM LC, and this is the Bloomberg Live Cattle Subindex. The numbers are different. The divergences are the same, and you can run this all the way down to 1 minute. It's great. Because actually, at the moment, what I've been watching in terms of divergences on LE is the 5-minute chart. And if you look at the what you're looking for in divergences is you ignore everything which doesn't have one of the peaks over either the 70 level or under the 30 level. You eliminate all the noise in between. And what you're looking for is a higher high on price with a lower high on RSI, or on the downside, you're looking for a lower low on price with a higher low on RSI. That is a divergence. At its very simplest, and if you pull up a 5-minute LE chart, you can see where that is happening, and you can see where it turns. That's what that's what my buy and sell signal system is based on. It's got a few tweaks and rules and so on, but basically that is the essence of it. That is an RSI divergence, and if you'll see a clear 5-minute RSI divergence at the high, then you'll see a clear RSI divergence at the low. And both times it turns. Where on a counter trend move, I suspect this is an ABC, we just made a higher low, and I'm expecting to see a higher high over the one that was made today. And we'll see how far that goes. How far could that go? Well, I think it can go to this trend line here, potentially. This could potentially take us up to 104, maybe 105. That could be a very nice sell position for the next move down. This trend line, if tested, should hold. Or potentially we're looking at a much larger move. And I think I'll be looking for divergence there, and I'll be looking for it. If we get a strong move, then this 60-minute buy signal can get filled. There is an alternative, though. What we can do is come back from higher, make a higher, while the signal is still open, make a higher low on RSI while we're making a lower low on price. That rather limits the downside. I'd rather see it make a more definite high and then go deeper, because this is very possibly, probably actually, the last move of the bear market in live cattle. It could be a violent move, it often is.
Yep. I would say that if you have a small account, live cattle is best traded on a higher low than trying to pick the low. If you're trying to pick the low on cattle, you could be catching a knife. And I'm just warning you because some instruments are easier to trade than others. Cattle is one of those commodities that can really move a lot in one day, which is great if you know how to manage risk. But some of you may not. Some of you may be new to trading, and I would stay away from cattle. That's my simple advice.
But actually, if you pull up a several-year chart of commodity X, Y, and Z, silver is a good example. Gold is a good example. Lots of good examples. If you look at what happens at the end of a bull or a bear market, you'll often see a spike move, which you don't want to be short against an up move like that, and you don't want to be long against a down move like that, because they will go through everything.
Mm-hmm. Absolutely.
And then they will reverse, and that will get reversed fairly quickly. But unless you're happy to just sit there and sweat while that happens, then you're better off generally getting in at the higher low.
Yep, I would agree with that. I have a quick cycle chart on. Do you want to cover the DAX while you have the screen, Jack?
Yep.
Jack? Okay.
Yep.
Yep.
The DAX. Now, the DAX. This is on the Russell 2000. That trend line we posted. We tested it. What we tested on the DAX yesterday was the retest of this high. It did not make a higher high. We have a potential. No, we don't have a sell signal brewing. We need a higher high for that. I'm expecting to see a higher high. It could go up as far as here. Stan's looking a little higher, aren't you, Stan? This could expand to a channel if we see Stan's target, which is in the 10,950 area.
950, right? Yep. Mm-hmm.
Yeah. Could see this expand to a channel. That wouldn't be unusual at all. I think this is part of the topping pattern starting to form. I'm not expecting to see it a lot higher. Am I assuming that the next move will be down? No. The next big move. But I gave a 75% odds to somebody today, and I think that's probably conservative. I think the next expansion, big expansion, should be down.
Yeah, I would agree with that.
So, and until we see some reasonable evidence to the contrary, I think that's going to be my working assumption.
Yep, fully support that. Okay,
right.
So no need for me to cover my chart on the DAX. I think you've already spoken to it, and the 10,950 area. That's where that's first target. It can go higher. We'll see what happens. And by the way, we're looking at like the end of September for that again, like around the 25th. Yeah. So we have time. We have time to make that move.
It's got time, but if we're not going to go an awfully long way in the interim, and I think it's very possible we aren't going to go a very long way in the interim, then you're going to see a lot of back and forth.
Yep, I agree.
That's the way it works. We're looking at a back at the moment, so it's not going to be a huge back. I mean, at the end of the day, a drop of like 17 handles on the ES isn't even 1%.
Yep.
And that's the difference between yesterday's high and the weekly pivot. So it's not a lot.
Mm-hmm. Let me cover off a cycle chart on cattle, real quick, Jack.
Yep,
first of all, there's a new feature on the Art of Chart called the Weekly Call. I'm going to be posting cycle charts on that. If you go to it, it's in the blog. And if you go down into the blog, you'll find live cattle and gold and the Nikkei. Okay, and by the way, these are
real cycle chart.
Yeah, this cycle chart, not the one on gold. See, the one on gold, you can see the green box and the red box here. I mean, that's just screaming upside. Okay, and I could go through all of the cycle charts, but I'm going to focus just on this one. The reason I want to do this is I want to show. And by the way, Jack, your answer around the one question about timing and ending a window, and sometimes there are just back tests inside of a move higher. I mean, the cycle chart helps you see that. Okay, so this was the cycle chart on cattle on the weekend. Now, and by the way, I'm just going through the blog and I'm blowing up the cycle chart, so this is what you can see on your screen. Okay, you can see we have a low window here. Okay. And by the way, this is a 20-day low window, meaning a 20-day cycle. Okay, look at how many cycles we have here. We have the 20-day, we have the 10-day, we have the 5-day. What is that? That is not a change in trend move. That's a minor change in direction for a back test to make room for the next low. Okay, so that's why I put the chart together that I did that said, hey, we're going to back test, right? Now, what's this right here? This is the high window for the 20-day cycle. Okay, and when does that end? Well, look down here. It ends, roughly speaking, maybe the 14th or so. Okay, so could we go higher until the 14th? Yeah, we can. And by the way, where does it begin? If you look down here, it probably begins roughly on the 7th or so. So this is why that move higher was called. But look at this cycle. I'm just trying to help you differentiate between them. Look at this low window. This is the one that I showed you on the chart, but look at how many cycles we're talking about. 1, 2, 3, 4, 5, 6, 7, 8. That's a cycle window that will change trend. That will change the trend of cattle. Okay, so we're looking for a trend change once we see evidence of a trend change. Okay, I'm not calling a trend change on a bottom. I think that's ludicrous and kind of nutty. But this is giving me a signal that there's a potential trend change coming, and of course I'm not calling a trend change until I see this trend line broken. Okay, so I want to see weekly pivot broken. I want to see the weekly pivot is here. I want to see weekly pivot broken, monthly pivot broken, and this trend line broken. So probably more than likely in October, we'll be talking about how cattle, after a very long downturn, right? Look at this downturn since November of 14. Okay, that we're now going to experience a trend change. So, if you do your technical analysis well, okay, and you have some reliable tools, you can actually tell the difference between a simple backtest and a possible major change in trend. And what are we doing? We're talking about this maybe 4 to 5 weeks ahead of time, which I think is is pretty awesome as far as I'm concerned. It gives me something to look at. Okay, so that's all I wanted to say on the cycle chart. I wanted to just explain that to you so you know how to read this because it doesn't come with directions. Okay, next question. Can you explain the difference between trading with Emini futures and CFD SP500? CFD, what is that? And what is your...
what CFDs are actually based on spread bets. Spread bets are
okay.
in the UK, and what they are is well, I mean, technically it's gambling, so it's banned in the US. But basically, what you do is you just move it. You just put a certain amount, let's say $10 a point, for the S&P moving, and if it goes up, you get 10 points, and if it goes down, you lose $10. And you can go long or short on it, and it's basically a very simple long and short system. Now, what CFDs are is spread betting detoxified and made a capital gains, tradable instrument for the American market. But it's essentially the same thing.
Okay. And your recommendation of trading E-mini futures versus CFDs, Jack?
Well, what I would say is CFDs are entirely based on futures. All of the people making markets in CFDs are using futures, taking their spread and offering CFDs.
Yeah.
Which product has fewer charges embedded in it? It's the futures, obviously.
Yeah.
Because in that system it can only be the futures. I think the advantage the advantage of spread betting in the UK is that one, it's a nice simple product, and CFDs have that too. But the advantage in the UK is if you are good at it and you make money on it, you don't have to pay any tax on it.
Yeah, that's interesting. I didn't know that. Yeah, I don't trade spreads. There are a lot of guys that trade spreads in futures, and there's a whole market for that and a whole way of analyzing that, and I don't play with that. I think that is far riskier than, in my opinion, trading spreads is riskier than trading futures.
But option spreads are slightly different. Okay, here's how one trade worked on one glorious day in, I think, 2008. Yeah, I'm driving back from my parents' place. It's a 200-mile drive. In the morning, I log on with my laptop and I short oil at £1,000 a handle. Yeah, I drive home. And during this day, I think the oil started the day. It was in a clear downtrend. It was in a nice area to short, and I think it dropped $10 in the day, which was 10% or so. It's so at the end of that day, I closed out the position, and I was up £10,000. So it wasn't an option spread, and there's nothing complicated about it. Just if it went up a buck, I was going to be down £1,000, and if it went down a buck, I was going to be up £1,000. And it dropped 10 handles, so I made £10,000. And that is a spread bet. It has the virtue of simplicity.
Yep.
But futures are the product on which it's based.
Yep. I think it's a personal decision how you trade and which one you trade, and I just learned a whole lot about CFDs that I didn't know. Okay, other questions that folks have? I think we might be out of questions, Jack. Anything else you want to talk about while we're here?
We've got a lot of moving markets at the moment. I wouldn't mind going. I'll spend 5 minutes just going through brewing signals and where I think we are on things.
Yeah, sure. Throwing you the screen if you.
No, really. Okay. I can't show the futures on that computer. But I'm just going to go through it by eye. I'll be posting the bonus charts later anyway. ES has reached the level where a lower low will set a buy signal brewing. I think we've had the A wave. We may well have had the B wave. I'm not sure.
I think we have too. Yep, I'm with you.
And I think we're on the C wave. I'm a bit doubtful about anything more than 72 or 68. Being managed. I think we'll probably find some support at one or two of those. It's possible it goes through, but not really unlikely. The Fibonacci target I'm looking for, the 50% is at 72, and the 61.8 it's at 68. Both of those are strong Fibonacci targets, and that is the weekly pivot and the monthly pivot, respectively. I think we'll find support at one or the other. I think we're most unlikely to see a full retracement back to 55, which is what those Fibonacci's have been based on. So I think we've got at the stage where buy signal can start brewing. NQ has not reached the target yet. They've got a target down at 47.80, and the weekly pivot is I think about 47.65. I said somewhere in that area. That is the 61.8 is at 47.83. It may actually just go down there, test and reverse. That wouldn't be a lot lower. The Nasdaq has actually made a new lower after hours, I think. Looking at it, yeah. I've actually already got a week 60-minute buy signal brewing. I suspect that'll be a full-size one by the time it's ready to go. TF has not reached the 30 level on RSI yet, and actually looks at an earlier stage. I'm working out the chart on it, but we've got a rising wedge. It's broken down. It is still really at the retest stage.
Yeah, the Russell has broken the RSI price cycle too. So I think this has another move lower coming.
Yeah, I mean the Russell really says lower. So it can be a huge amount lower. I mean we could potentially find support, let's say 12.45 maybe. So I'll be running the fibs on it. We've got a decent level at 12.45. That wouldn't be a bad place for it to go. I think the chances of getting back to where this rising wedge originated at 12.26 aren't high. But you never know. Russ is rejecting from a key trend line.
Yeah,
it's the one I posted yesterday. So
absolutely.
Keeping an open mind, but I mean the lean has really got to be retracement then higher. So I think that's very much the lean. The dollar has got a decent amount of divergence and has broken up. I think we reached the right area, went very slightly below stands, 94.55. It's showing every sign of reversing. It's not actually reached the key point to signal that reversal has happened. I've got that key point in the 95.375 area at the moment. So I'm waiting for that to break.
Yeah. Monthly pivot is 95.52.
Yeah. Okay. So it needs to get above there, then it needs to make a new high of 96.25, and I'm not expecting it a huge amount higher than that. We've got declining resistance at 97 or just under, and that's the obvious target, I think. By the time that's reached, that may actually be at the high end of the 96.5, and that is a big resistance area, which is unlikely to break by an awful lot. Oil, nice high today. No negative divergence. I'm expecting a retest. If we were to reach the ideal classical triangle target, where have you got declining resistance for that, Stan?
Pulling up the oil chart right now, we're going to be right at resistance here in a little bit. We have a nice trend line here, which I'm not expecting it to break.
It's not far away. What I'm thinking is we're pulling back at the moment. We then make a higher high. That will deliver our sell signal. If we're going to reverse, we reverse that.
Absolutely right. That's going to set up the divergence right here.
Yeah, it hasn't reached the obvious trend line target yet, and it's pulling back. This should be the low before the high. So if it bulldozes that trend line, then we get a 50. So and bigger picture, I think whatever we're looking at here is part of a right shoulder forming on an IHS in all probability. Mm-hmm. If we look at GC, we're a nice pullback today. Again, we don't have divergence yet. There's a lot of stuff. Looking at this here, I've got the obvious fib targets at 37.5. We broke stands 42, but not a lot. At the moment, it's sort of midway between the 42 and the 37. I think there's a good chance that it's going to reach that 37 or 38. There's a couple of Fibonacci levels in that sort of area. Once I think we're making the high before the low, we'll probably go down, go a bit lower to set up the positive divergence, and then we'll find support and go. There is a risk, though. I'm just saying, if you look at the chart chat from last weekend, I was talking about the trend line that hadn't been hit, which was the rising support trend line. I'm wondering whether that needs to be hit. It's potential unfinished business below. In the event that we lose 1330, we may be going to retest it. So I'll be looking for a nice bottoming setup, and I probably won't be calling that on Twitter tomorrow, because actually I'm out most of RTH tomorrow.
Yep. Cycle chart's calling for a high window. So, for us to do anything lower than the monthly pivot, it would be a miracle, in my opinion.
Yeah.
Monthly pivot is like 1330.
Yeah, okay. That's our bull bear line. So it should not go and convert that monthly pivot. If it does, then we're looking at something different, and it may well retest that low. It doesn't, and actually, it doesn't even need to retest the low now to reach that trend line on my RTH chart.
Mm-hmm.
So I think that's what we're looking at there. ZB has... Wow, what a move.
Well, it's a great rejection. We were both saying, hey, this is the area, so it did exactly what we thought.
Off it went. So played out and then just went down and down and down. I mean, effectively, this was a trend down bonds. Very nice move, not finished yet. No positive divergence, hasn't reached the right target area. We are doing a retracement. I'll have some targets for that in my bonus chart. But after that, we should go down and do the 166s. That's my expectation. So
I'm on board with that.
NG. We broke up from the falling wedge. We had a really nice move up, and at the moment it appears to be forming a bull pennant. I'm not really seeing any reason why I'd expect the low to be retested. I don't have any negative divergence. I think this can shoot for the moon. And actually, I think this might genuinely shoot for the moon. Because
we have a possible triangle here. We just have to be aware of the top of the range. We find resistance, we could get a back test, and then higher. Yep. But I agree with you. I think 34s are definitely within the realm of possibility.
It needs a new high. New high eliminates the triangle. So if we make a higher high, then we should be going to the next target. Was that 3.6?
3.45 is the 100% fib. Yeah.
At that stage, we're probably looking at a back test and a higher because I've got a very nice looking inverted head and shoulders, and this retracement has been making the right shoulder on that. I think the target I worked out was somewhere in the 4.5 area.
Mm-hmm.
So I think we can be having a really fun time on NG for months. So that looks great. Right,
okay,
so
no other questions. Everybody, thank you for your time. Thank you for your questions. Great job as always, Jack, and see you guys on the Twitter feed tomorrow.
Pleasure as always, mate.
Right, take care. Yep, same here. Take care. Bye-bye.